Hello, and welcome to our channel Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing and crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and looking for smart money management options, then we are fortunate to have found each other. Whenever it comes to buying stocks, the first thing to consider is the current market value. Since the new year 2022 started, stock prices have been touching the sky. But, on the other hand, some profit-yielding undervalued stock is also available. The need to look for undervalued stocks arises when the stocks, like FAANG, yields the expectation of rate hikes. This video will make everyone aware of the undervalued stocks so they can stop worrying about their investments. But remember, the only rule of investment: don't invest more than 5% no matter how big the opportunity is. This saves you from moaning about huge losses later. So, watch the video till the end to know about the most undervalued stocks to buy. Market value trend is significantly important because it decides the rise or fall of the stock. But currently, the pandemic situation and its Omicron variant have made the situation worse. So, understanding the market trends is not very easy. But no worries, because we are going to tell you some of the most undervalued stocks to buy in this unpredictable situation. Zoom Video Communications. Pandemic became the root cause of the popularity of Zoom video communications. It helped everyone to work remotely. Everyone liked it because it offers video telephony with perfect audio and online chat services. The company stated total revenue of $1.05 billion for the third financial quarter. This represents the continuous annual growth of the company. There's an increment of 35% per year. There are a total of 2,507 customers taking part in $100,000 in trailing in 12 months. The revenue collected was up to 94%. Zoom has predicted the launch of its own cloud contact center software in the following year. Now, talking about its market growth, the company has not made exceptional market progress by the end of 2020. Its revenue growth is undeniable, but its stock growth remains there. Investors have to think before investing. Will the future be the same as the past? Will people be again dependent on the Zoom video communication application for working remotely? If yes, then add Zoom in your portfolio without any delay. Alibaba Group Holding Limited. No e-commerce related conversation can be completed without mentioning the giant of the Chinese e-commerce industry. It can be none other than Alibaba Group Holding. The company is no longer related to e-commerce. China has expanded its roots towards the internet, entertainment, and cloud computing tech. If we observe company shares, we will know that regulatory pressure has declined the growth this year. But everyone is well aware of the company's massive growth, so this is an opportunity for many investors to buy this currently undervalued stock. As we know about the business relations between Warren Buffett and Charlie Munger, who is the vice chairman of Berkshire Hathaway, he praised the fabulous crackdown of China on Jack Ma's Ant Group. So we accept that the growth rate of Alibaba is being slow, but it still has succeeded in making a total revenue of 30% annually. But investors are still worried about the low valuation of this e-commerce giant. Surely, an investment in Alibaba stock is attractive if we see it from a risk-reward perspective. Zynga. As we are talking about the most undervalued stocks, every stock we will discuss here would have been suffering from a downfall from the past year. Similar is the situation with Zynga. Its stock kept falling over the last year. Investors doubt the progress of Zynga because of the privacy changes on iOS and Android. The prediction of future disruptions has also negatively affected the gaming publisher's reputation. But investors must not deny the other growing opportunities of the company. In reality, Zynga boasts one of the industry's most robust sets of mobile development labs. The growth of the mobile market isn't sure for many coming years. One can't grow the financial stats of a company while investing. Zynga has been on fire in the third quarter in terms of financial performance. Its revenue increased by 40% year-over-year to $705 million. The company's third quarter sales and bookings are at an all-time high, and the company is on track to achieve its best financial year ever. With a market value of $7.1 billion, this growth stock appears to be too good to be true. Considering all this, Zynga stock is a treat to buy as the undervalued stock. Pinterest. Stocks in social media, on Tuesday, Pinterest was being pinned on the board. To everyone's shock, the company's stock price declined to a new 52-week low. This followed a drop from Guggenheim, and it claimed a decrease in the social media's user base as a reason for the downgrade. Everyone seems worried about their company's growth after the reopening of economies, a decision taken by many countries. Observing the company's previous annual growth and increased revenue, it is expected that this downfall won't stay for the long term, so that's a golden opportunity for investors to buy its stocks. Pinterest reported sales of $632.9 million in its third financial quarter, increasing 43% year-over-year. Before investment, one must know the other fabulous progress by the company. The company has marked its name by introducing pinner products and beautiful experiences to the world. This exemplifies the continuous efforts of Pinterest to stand apart from the crowd and give better results. Additionally, Pinterest is launching Creator Rewards, its first revenue scheme for content providers. One must not think more before buying tech stocks of Pinterest, which will grow soon. Block. One of the historically finest stocks in the stock market with the continuous growth to buy is Block. It is also known as Square. The company's reportable segments include the Seller app and the Cash app. The Seller environment is built for business. It gives merchants everything of the hardware, software, and services they need to run a business across both physical and digital channels. Its Cash app has been a significant success because it allows users to send and receive cash anywhere and anytime. The company's vigorous growth can be estimated by the massive demand for its products over the previous years. Block's revenue increased by 27% year-over-year to $3.84 billion in the third quarter. The selling environment of the company has played a vital role in growing many businesses, both online and physically located shops. The company should continue to grow as a one-stop shop for numerous companies. Its weaknesses can make an investor doubt its authenticity, but its progress can be a reason for quickly buying its stock. IBM. IBM is a well-known tech company that was founded more than a century ago. It has undergone various transformations to keep up with the shifting, competitive landscape. IBM has suffered a lot, but it will soon come with a new trending face. IBM plans to spin off a substantial piece of its existing business, namely its managed infrastructure segment, into a separate company named Kyndryl. The new IBM will cater to a fast-expanding industry that comprises both publicly and privately operated data centers, as well as cloud computing service providers. According to IBM, the rise of cloud technology is providing a $1 trillion global market potential for the firms alike. Despite this strategy, IBM stock continues to trade as if the business will be mired in a long-term slump. Cloud computing, on the other hand, is a burgeoning industry. The new IBM will be one of the market's most powerful firms. If you're looking for an underestimated technology business, IBM can be a great selection. Amazon. Amazon is usually known as the pioneer of e-commerce. Amazon is still the fastest-growing stock. It has been generating high revenue levels every year. The e-commerce giant may not be the first name that comes to mind when people think of undervalued businesses. Amazon made 3 times profit during the pandemic last year when everyone was doing online shopping. It is growing rapidly because a major part of its profit is reinvested for further success. However, there have been certain regulatory issues raised. Some fear that, like some of its fellow digital giants, the company's e-commerce, cloud computing, advertising, and other unified operations may be targeted by authorities. In any case, Amazon is beginning to appear undervalued, considering its long-term development trajectory and potential. Even though Amazon's top and bottom lines continued to grow, the stock's price scarcely moved from summer 2020 to summer 2021. Target. Target, NYSE TGT, has been a dividend aristocrat for nearly 50 years, increasing its dividend distribution to shareholders every year. Target has evolved from a big-box retailer to a one-stop shop that sells everything from groceries to basic household items. In classic department store categories like clothes and home decor, Target also offers its services. The fact that nearly every American lives within 10 miles of a Target store are the company's true difference. This has aided the company in converting its stores into distribution facilities. Local retailers, rather than distribution facilities, fulfill 95% of all orders. Curbside pickup is also available, and the company is extending its ship delivery service, which will only be available to Target customers. Target has plans and strategies to open new stores, improve supply chains, and make positive changes to the existing stores. The current annual expenditure of the company is $2.7 billion, but it will rise to $4 billion in the coming years. The company is committed to growing its e-commerce business while maintaining a consistent dividend. Its stock still trades like it's solely a brick-and-mortar shop. E-commerce pure plays are all the rage these days, which helps to explain why Target stock is undervalued. Disney. Disney Plus is the company's foray into the world of streaming television. Halfway through 2021, the subscription service had nearly 120 million subscribers. Disney Plus is anticipated to reach hundreds of millions of subscribers within the next several years. Disney Plus will be in direct rivalry with Netflix as a result of this. As the global box is completely changed, Disney is experimenting with new ways to monetize its films, such as subscriptions to premium access. The non-streaming divisions of the corporation have a lot of room for growth in 2021 and beyond. Undervalued stocks are the best to invest in. Undervalued stocks save a person from facing huge losses. Although no one can be sure about the growing future of the undervalued stocks in the future, they can be profit-yielding for sure. No prediction can be 100% sure about the growth of the stock, but some tips and techniques can help investors make a better decision for investing and selecting a better stock. That's pretty much it for the video. Please subscribe to the channel, like the video, and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya till the next time.